Hello traders, and welcome to an introduction to the Avramis swing indicator and our trend reversal strategy. Now, if you've been to one of our workshops online or offline and received access to the Avramis swing indicator, then this video is here to guide you. Now, before we look at our strategy regarding the indicator, let us refresh our memory as far as the theory is concerned. Now, of course, trends is one of the most important concepts you will learn when it comes to trading. It's something that you will read about in every book of technical analysis. However, the one thing that you will not find in any book is how to identify a top and a bottom in the market. Identifying a top or a bottom comes prior to trend identification, and this is what our indicator is based around. Mathematically and objectively defining a top or a bottom in the market. Actually, this concept is something that is widely credited to Tradepedia's founder and CEO, Mr. Avramis Despotis. So what is a trend? Well, a trend is simply the general direction of the market, yes? Whilst markets do not move in straight lines, they move in a series of zigzags that create tops and bottoms. Putting the sequence of these tops and bottoms together is what helps us identify a structured trend. Therefore, from now on, we define an uptrend as a series of successively higher peaks and higher troughs. Two ingredients to our uptrend, higher tops and higher bottoms. As long as we continue to have those ingredients, we continue to be in a strong uptrend. A downtrend is just the opposite, a series of declining peaks and declining troughs. Two ingredients again. And the third phase we have in the marketplace is what we call a range or a sideways pattern, characterized by tops and bottoms at around the same horizontal levels. Now, in order to have a possible trend reversal to go long, it entails that we have a confirmed downtrend in the market, characterized by the lower tops and lower bottoms. Now, once in all of this downtrend, the market will fail to continue to a new low by confirming a bottom higher than the level of the previous bottom, outlined at B1. In this case now, we have a possible trend reversal since one of the characteristics of the downtrend has already been destroyed. Now, if the market is to break above the level of the previous top at T2, this would destroy both of the characteristics of the downtrend and signal to a trend reversal to go long. However, what we must have in mind is that a trend reversal is only activated once the market breaks above the previous top at T2. Now, if we were to look at all the phases of the market downtrend, in pattern number 2, we have a strong downtrend in the market. After a pattern number 2, what will happen? The market will make a bottom and start correcting upwards, leading us to pattern number 4. In this case, as long as T1 remains below T2, we continue to have a strong downtrend. And as long as the downtrend continues, market will confirm a lower top at T1 and prepare to break the previous low before becoming a number 2 again. And this is how the trend flows from 2, 4, 6, and then back to 2. Until one time in all of this downtrend, the market will fail to continue to a new low, forming a pattern number 8 and warning us towards a possible trend reversal. Now, if the market is to break above the previous top at T2, leading us to pattern number 10, we then have a confirmation of a trend reversal, the end of the previous downtrend, and the beginning of a new uptrend in the market. Now, in the case that we have a possible trend reversal to go short, it means that we have a confirmed uptrend in the market, characterized by the higher tops and higher bottoms. Now, one time in all of this uptrend, the market will fail to continue to a new high by confirming a top lower than the level of the previous top, outlined at T1. In this case, we have a possible trend reversal since one of our characteristics of the uptrend, the higher tops, has now been destroyed. Now, if the market is to break below the previous bottom at B2, that will signal the end of the previous uptrend and the beginning of a new downtrend. If we were to look at all the phases of the uptrend in the market, in pattern number 1, we have higher tops and higher bottoms, a confirmed uptrend in the market. After pattern number 1, when the market creates a top and starts correcting downwards, it leads us to pattern number 3. Now, as long as B1 remains above B2, we continue to have a strong uptrend in price. And once the market finds a bottom higher than the level of the previous bottom, then that leads us to pattern number 5. And the uptrend will continue to flow 1, 3, 5, and then as we break the previous top, back to 1, 3, 5 again. Until one time in all of this uptrend, the market will fail to continue higher by confirming a top lower than the previous top outlined at T1, where in this case we have an uptrend under threat and a possible trend reversal to go short. Now, if the market breaks below the level of B2, that confirms the end of the previous uptrend and the beginning of a new downtrend in price. Now, regarding execution of the trading setup, once we have a possible trend reversal to go long, we can place our order above the previous top at T2, signaling our entry level. Our original stop loss is placed at stop loss level 2 below the level of the previous bottom at B1. Now, once we have our outlined targets above us, as the market reaches the first target at the 161%, we close 50% of our position and at the same time trail our stop loss either up to the entry level or to the stop loss level 1. From there on, we allow the trade to reach the second outlined target at 261, where we close the remaining 50% of the position. The same, of course, on the opposite side of the market. So once we have a possible trend reversal to go short, we can place our order outlined below B2 at our entry level, with our original stop loss placed at stop loss level 2 above the previous top outlined at T1. Now, once our trade is activated and the market reaches first outlined target at 161, we can close 50% of the position and at the same time trail our stop loss either to the entry level or to the stop loss level 1. From there on, allowing the position to reach the 261%, our second outlined target, where we close the remaining 50% of the position. A trend continuation breakout signal is generated once we have a confirmed trend in the market that is getting ready to break out of the previous top outlined at T1, which also signals our entry level into the breakout. Now, in the case of a breakout, our stop loss is placed below the previous bottom at B1. And once we have our outlined targets at the 161 and 261, at the first target again, we close 50% of our position and trail our stop loss up from the original level up to either the entry level or the stop loss level 1. From there on, allowing the trade to reach the 261, where we close the remaining 50% of the position. In the case of a trend continuation breakout signal to go short, it would mean that we have a confirmed downtrend in place. Now, once the market approaches the level of B2 and prepares to break out to a new low, that also signals our entry level into the market, with our stop loss placed above the previous top outlined at T1. Now, once the market gets to our first outlined target at 161, we close 50% of the position and trail our stop loss from the original stop loss level down to either the entry level or the stop loss level 1. And from there, allow the trade to reach the 261 level, where we close the remaining 50% of the position. Taking a look at the Avramis swing indicator on the MT4 platform, we can see that the first job of the indicator is to outline to us the correct tops and bottoms in the marketplace. Now, from there, using our rules of trend identification, we can see that we have a strong downtrend in place identified by the lower tops and lower bottoms. Now, if our downtrend fails to continue to a new low by confirming a bottom higher than the level of the previous bottom, then we have a possible trend reversal. Once we have a possible trend reversal, the indicator will show us the green triangles, making us aware of the possible trading scenario. Now, as we can see, the indicator is outlining to us our entry level, our stop loss, and our two take profit targets. Now, if we look in the top left-hand side of the chart, we can see the monitor panel of the Avramis swing indicator. First and foremost, what the monitor panel is showing us is the pattern number that the market is in. As we can see now, changed to a number 10 ever since our trend reversal was activated. The other thing we can see is the state the market is in, whether overbought, oversold, or in a neutral state. Furthermore, once we have a possible trading scenario or an ongoing trading scenario, we can see the entry type, whether it is a trend reversal or a breakout. The next important thing of our monitor is the trade strength. Now this strength signal comes from another one of our indicators called the Avramis analyzer. What the analyzer is doing is looking at all the technical characteristics of the marketplace, whether it's the quality of the tops and the bottoms, the trend indicators such as the linear regression, the moving averages and the MACD, the state of the market and the higher time frame, in order to come up with one final scoring of how good the trade setup is. Now this scoring goes from 1 to 10, 10 being the highest probability signal where everything is in agreement. Now this is used as a ranking towards our trade, something that we will also use as a tool of money management, as we will see. Now, as the market is changing and tops and bottoms are being formed, the monitor panel is updating in real time. Now, once we have a new possible trading scenario, it will outline to us the details along with the entry and exit levels. As we can see, once we get close to the previous top, and have the possibility of a breakout trade, the indicator will outline to us with the green triangles again our entry level and our take profit targets. Also here in the left of our monitor panel. Now if we go into the indicator settings of the Avramis swing and right click on the chart and go to indicator list, here we will find the Avramis swing advanced version where we can change the parameters. Now most of the parameters here do not need to be changed and can remain as they are. However, if we scroll down to the bottom and we come here towards our entry signals, we can see that we can customize the minimum score for a breakout or a trend reversal signal. For example, if I set the minimum score to 1, it will outline to us all the possible trend reversal and breakouts that are in the market. Or we could change that to a minimum score of 5, for example, where it will outline to us only the trading scenarios of a minimum score of 5 and above. Furthermore, we can see the other type of entry signals, such as the trend continuation wave entry signal that come with the pro version of the Avramis swing. Now if we scroll down a little bit lower in the parameters, we will find the next important part of our monitor panel, which is our money management and position size calculator. This is the last thing that you see in the monitor panel here, where it says risk and the correct lot size to be taken. Now, in order to customize this towards our account size, the first thing we should do is outline the annual risk of our account. Now, this can customize according to any account size. So, if I set my account annual risk to 10,000, from there, I choose a percentage to be allocated to each time frame. For example, the maximum risk a weekly time frame trade is allowed to take is 30% of that annual allocation. The maximum allocation of a daily time frame trade is set at 16% of the annual risk. And for the 4-hour time frame, it is set at 4%, and for the hourly time frame set at 2%. Now, of course, these numbers can be customized in order to make the money management more aggressive or more conservative. However, this is also a set money management template that can be used. Now, let's see how the account size, the time frame the trade is on, mixes with the strength of the signal in order to find the correct position size. For example, now that we are looking at the daily time frame, any possible trading scenario will take a maximum risk of 16% of that $10,000 allocation, or in other words, a maximum risk of $1,600. One way that is affected by the strength of the signal is that the maximum allocation of $1,600 will be risked if our trading scenario has a trading strength of 10 out of 10. If, for example, our trading setup is 5 out of 10 trading strength, then the trade is allowed to risk a maximum of 50% of that 16%, or in other words, $800. Now, as those trading scenarios change, depending on the annual risk we have set, the time frame the trade is on, the strength of the signal, and the size of the stop loss, the position calculator will find the recommended risk. Now, depending then if we are using stop loss 1 or stop loss level 2, as we saw in our examples, using stop loss level 2, the monitor panel will automatically calculate for us the correct position size to take in standard lots. Now, once we have edited the parameters of the indicator, it is best to save the settings here and then also save this as a template on the MT4 platform so that we can have our own customized settings with the indicator. So that is our Avramis Swing Advanced version indicator, along with our trend reversal and breakout strategies and our position size calculator. Enjoy trading with our proprietary tools and wish you green pips to everyone. So follow the trend, follow the Avramis Swing, and follow the bull.